Hey everyone, and welcome to today's episode of Pivot to Profit, where we help entrepreneurs just like you keep more of what you make. You work way too hard to give it all away, and you work way too hard not to have enough money in the bank. I am Pam Jordan, your host, and I'm joined today by our tax queen, Alexis Sidney.
Hey everyone, super excited to be here today.
Today's topic is how to leverage profit first for taxes, and it is a gold mine, friends. So hang in with us. But before we dive in, if you're a founder, CEO, entrepreneur whose business is just overwhelming, you love the sales part, you love the fulfillment, but the numbers and the taxes, you're just quite frankly probably ignoring. Look, we are here to help. We understand. Pivot Business Group was created for entrepreneurs to help them know their numbers, increase their profit, reduce their taxes, and grow their wealth. Just go to pamjordan.com and schedule a call with Alexis and I team. We would love to help you solve all those problems. All right, Alexis, profit first is one of my favorite topics. Just for context, when did you learn about profit first?
So, ironically, I learned about profit first during COVID time. Everyone joined Clubhouse. I don't know if you did
Oh,
during.
I did. I was a rock star in Clubhouse for like 2 weeks, just for the record.
Yeah, and I stumbled across this room and it was just like this accountant. He was talking about it, and we were all accountants hanging out together. And I was like, what is profit first? So I got the book and, got in the community. And of course, yeah, I got like 3 or 4 copies. I got signed copies, all of that stuff. And that's how I learned about the profit first, and then, took the certification, went through all of that stuff because I was like, this is great. This is awesome. So that's my profit first journey.
I love it. I love it. I don't remember where I first heard about the book, but I actually listened to the Audible of it first. And I remember I was in the car. I was a fractional CFO. It was 2018, I think. And I remember arguing with Mike, the author, in the car because I was like, "But I'm an accountant and I can make a budget. Why do I need the accounts?" Right? And like I think in the book he said after chapter 2, like email him, whatever. And my header was like, "But I'm an accountant." Right. And so, but I listened to the rest of the book and I was like, okay, it makes total sense. So what profit first? And so from there is I got certified as well. So just for context, we are profit first professionals, which means that Alexis and I are certified to teach, implement, instruct profit first to anyone. And so I've been certified since 2019. I implemented it in Pivot Business Group. Alexis went through it in 2020. And all of our fractional CFOs with Pivot Business Group are certified PFPs, Profit First Professionals. So we implement this with most of our clients or some aspect of it. But if you've never heard of Profit First, let me give you a short version of it. So it's a book created by Mike Michalowicz. Good luck spelling his last name. Um, I highly recommend you listen to the Audible of it because he tells more stories and it's very engaging. But what it is a cash flow methodology. It is a way for you, Miss or Mr. Entrepreneur, to manage your money through bank accounts. It's similar to the envelope system. If you had a grandma that would get money from grandpa when he came in from the mill on Friday, she'd have a grocery envelope, a mortgage envelope, I don't know, car envelope, shopping envelope, whatever. It's the same theory, but it's using bank accounts. And there's a lot of science behind it, Parkinson's law, behavioral therapy, or psychology, all this. But ultimately, what it comes down to is if you were to look into your bank account right now and see $20,000, girl, you're going to go spend $20,000, right? But if you look into your bank and you have multiple checking accounts, and one of them is for operating account, one of them is for profit, one of them is for tax, one of them is for payroll, one of them is for owner's comp. You look in there and cumulatively you have $20,000, but you only have $5,000 in your operating account or OPEX. That's what you get to spend. So what it is it's a new way of managing your money. So everything comes into one account and then it gets allocated into other accounts or envelopes. And what this does is it allows you to see, oh crap, I do have $20,000, but a lot of it's already spoken for. And so it's using these intentional bank accounts to do that. And it's called profit first because it takes the traditional accounting formula of sales less expenses equals profit and it spins it on its head. Because what happens is if you live by the formula of sales less profit equal or sales less expenses equals profit, you are hoping and praying for profit. And at the end of the day, you are not going to have any money in the bank. So when you flip that formula and get a winning profit formula of sales less profit equal expenses, you are guaranteed to be profitable. You are guaranteed to have money in the bank, and you are guaranteed to be able to grow your wealth and not have taxes be a problem. So it's multiple checking accounts so what that means is if you get $10,000, a percentage of it, say 10% for easy math, 1,000 goes into your profit account, period. That means that 9,000 is what you have left to work with. And so in this methodology, then you would put 10 to 15 into a tax account, another $1,000 away. You put money into an owner's comp account or a payroll account, more money away. And so that $10,000 quickly becomes $5,000, and that's what you have left to run your business with. We have a whole implementation process. We would love to walk you on this journey, but this conversation is around the tax piece of it because what's important to know is one of those bank accounts, one of those buckets, one of those envelopes is for tax. And it's not necessarily money to set aside to go to the IRS. It's for tax strategy. So Alexis, tell us all about why we love Profit First and the tax account.
Yeah, so definitely Profit First is amazing. I love it. It's great. Everyone should be on it, even in your personal life. But when it comes to the tax account portion of it, it's great because it's a behavior, as Pam said. You're setting aside money for taxes. So you're following a discipline where it's like, hey, I know that I'm going to have a potential tax bill. Let me go ahead and set this money aside. So it's there. And when you form that behavior, you have something to go to when you do your taxes. So when it comes to the strategy piece of it, I love it because I always tell my clients this is where my strategy hat comes in, and Profit First doesn't talk about this part in the book. So maybe we need to get our own book and kind of dive into that account.
Profit First with taxes. We need to do it like an addendum or an added chapter. I love it. I'll
Right.
reach Mike and see what we can do.
So definitely when we have those conversations, I'm glad the money is there. Like you're doing the right thing. So when I work with clients who are on Profit First, the beauty of it is we're strategizing. So the goal is, yes, you have your money there, but we have strategy so that you're not going to take that money and give it to the IRS or pay the state. But what happens is we put strategy so that we can strategize around what's in that account. So the beauty of it is I've been able to see clients that stack that account and it's like, oh, taxes. And then they're like, I don't have a tax bill. I get to use the money. And I'm like, well, yeah. So that's the win around having the money there for the discipline so that if you did need to use it, you don't have to figure out like, where am I going to get this money to pay the IRS? Oh gosh, what am I going to do? And it's there and not have to use it or just use a portion of it because you have strategy that offsets what you were accounting for a tax bill.
Yes, I love it. And we talk to so many entrepreneurs who've had the wonderful conversation with their tax professional. Notice I said professional, not strategist, tax professional, who says, man, Sally, looks like you killed it last year. Congratulations. You owe the IRS. I just need your bank account so I can have them draft it. And then Sally is like, hold up. I did not do that great last year. I do not have $20,000 in the bank and you ain't drafted nothing. So that's where if you use Profit First, you have money sitting in a tax account that's for, yes, paying the IRS if you have a bill due, but more importantly, you have that cash available for tax strategy purposes. Because a lot of the strategies that we've talked about, the Augusta rule, the accountable plan, paying kids, retirement, those require money. And so if you are profitable and putting your profit first and you have this $30,000 sitting in your tax account come year end, and you're working with a tax strategist, you don't have to just let that money go to the IRS. You can use any of the strategies that we've told you about to use that money and come into your pocket. And many of those strategies that Alexis has trained us on, that money comes in tax-free, friend, tax-free money into your pocket. And so the problem is people want to do tax strategy in the ninth hour. Like it's December 20th and they're like, oh, I don't want to pay taxes. What do I do? Okay, well, we should have had a conversation in March, right?
Right.
And then again in June and then September, right? To get up to this point. But if you have liquid cash available, there's things that you can do. You can put money into retirement. You can put money to investments. You can do the Augusta Rule accountable plan, all those things. But if you don't have cash designated set aside, if your financial statements say that you have a net income and that you owe the IRS, you still have to come up with that money. But if you use profit first, you have money sitting in an account that you can choose to either give it to the IRS or do these fun tax strategies with.
Right. I agree. Yeah. It's just definitely it's a puzzle and it's a game. So when you work with the right people, you can strategize and it goes from there.
Yes, I love it. So typically, Alexis, what percentage do you recommend people put into a profit checking or savings account when they're, or I'm sorry, not profit, but tax account when they're doing profit first? The book has a percentage. What do you typically recommend?
It depends.
I love it. Oh, always it depends.
That's always my answer, right? It depends. Yes, the book says 15%. It starts with 15%.
Yes.
I got tickled because I read the book before getting certified. And, as a trained professional, they teach you it's a gradual increase. So to get to the 15%. But nonetheless, for me, I say 15% is a good benchmark if you do not have strategy. There's two ways you can play this game. You can leave the 15% there and then you can just wait until, the end of the year and say, hey, I got my strategy. I got my reward. I got some money. Or you can work in sync with your strategy and calculate and, hey, this is what my tax liability is going to be and forecast throughout the year and adjust every quarter based off of known facts and strategies. And you can decrease that number so you do not have excess sitting at that account for taxes, and you can reallocate some of that 15% to maybe more profit or maybe something else. That depends on how you work with your profit first professional. But nonetheless, like I said, rule of thumb, 15% is always a good number. That's a great number to put in there. But again, if we are going to take the other approach where we're looking at the strategies, we can reduce that number, but that will require a conversation because that's a customized approach based off of what your big picture is.
Yeah, I love that. And also a call out, and we've talked about entity structures in multiple episodes, but if you're a sole proprietor or a single member LLC, you're going to have to pay self-employment tax, which is 15%. So profit first, if you don't want to move up to an S Corp or a C Corp or change your entity structure, you need to be putting a 15% away, period. Just because that tax bill is coming.
Right.
If you're not on payroll in your business because you don't have the right entity structure. So 15% you need to be doing if you're in that category and you haven't up-leveled your entity. But 15% is a really good benchmark because regardless of the size of your business, at least that money's building up and it gives you options. Because here's the thing. In September, say your business is killing it and you have cash in the bank, you have options. If September, you're killing it, but you have no money in the bank, you have no options. And then come December, no money, no options. March 15th, April 15th, no money, no options, but you still have a tax bill. Right. And so this is the difference. This is the tool that gives you options. Because if you have money in a bank account, you have options. You can work with a tax strategist. Alexis has crazy things that you can do with medical devices and solar panels to turn $1 that you invest into $4 of deductible expenses with the IRS. We've got top level things, but a lot of the strategies do require cash. And I think people don't associate that.
Right. Yeah, I agree. Like you have to have some cash on hand to even tap into some strategies. So you got to get it from somewhere. And you don't want to be borrowing money to start a strategy fund where it's like, hey, if I have the money sitting here, I can use this money because this was going to be the money I would need to pay the IRS if I have a tax problem. So why not use the money you have? So when you have this system, you have some options, like Pam said.
And think about if you were sitting at it's year end, you're sitting on $40,000, you have a conversation with a tax strategist, you can open retirement accounts. You can make investments into your wealth building that then reduce your taxes. We had a call with a client this week, and that was the strategy that Alexis recommended. It was take that money and go invest it in different retirement aspects, and all of a sudden they got a refund. So instead of putting that $60,000 and saying to the IRS, that $60,000 went into retirement to grow their wealth, and they got a refund.
Right. It's it's a no-brainer.
And so if anyone ever says the more profit, the more taxes, that's only because they don't have a tax strategist.
Right.
And the thing is the more profit done with profit first, the more cash you have. And the more cash you have, the more options you have. And I've said this before, our wealthiest clients pay the least amount of taxes because they have cash available to take advantage of these crazy legal, above board, in black and white, in tax code strategies to build their personal wealth while reducing their taxes.
Right. I agree. I'm gonna have to get a t-shirt made. More cash, more options.
Yes, I love it. We need like bumper stickers or something. I love it. I love it. I love it. So, profit first is a methodology using bank accounts to move money through your business. There's a lot of nuances that go to it. I have helped over probably 250 businesses implement, that's probably too low, implement profit first at this point. Everyone does it slightly different. But what's in key pieces is there's always money coming into one bank account, and then it just gets allocated out from there. You need a profit account, you need a tax account, and you need an OPEX account. A payroll account is great, owner's comp account. When people are starting out and they feel overwhelmed, the first step that I recommend they do is to open a separate savings account, name it profit and tax, and just put 2% over there. If you are struggling, start with 2%. And like Alexis said, then you can, in a month, put it to 5%, then put it to 10%, then incrementally increase it so that by the end of the year, for every dollar that comes in, 15% is going over there. And you'd be amazed how quickly that adds up. So now that before you were just robbing Peter to pay Paul, now when you implement this strategy, you've got $5,000 sitting in a profit tax account. You've got a conversation with your tax strategist. You now have options where you didn't have options before.
I agree. So definitely just get on the system if you're not on one and get you a strategist so that you can strategize so you know what, game you're playing because it's different for everyone. It's unique to your situation, your income levels, your entity structures, all of that stuff plays a part. So, there's something for you. You just need to get a plan of action and get you a profit first plan, and we can go from there.
Yeah, and that's a really good point, Alexis. It is a relationship between your profit first PFP, profit first professional, or whoever's helping you implement it, or if you're implementing it yourself, and your tax strategist. Because we have had clients a few years ago before we did taxes internally, where we implemented profit first, and they had all of this money, and then they went to their CPA, and their CPA made them give it all to the IRS. And I was like, please stop. Don't do that. I lost my professionalism a little bit on that CPA because I was like, I know what they can do with their money better than you can. Like, don't give it to me. There's legal ways, legal strategies. So there is a relationship between managing your money, growing your profit, having money set aside for tax, and having someone on your team that understands your goals and knows how to best utilize that cash so that you can reach your goals without overpaying on taxes.
Agreed. Definitely the right professionals, because there are, like Pam mentioned earlier, there's a difference between a tax preparer and a strategist. There's, difference between CPAs who are strategy friendly versus, hey, I don't believe in strategy. I'm black and white. I don't want to do that. I don't want to know about it. So you just really want to work with the professionals that are in alignment with your goals so that you're not leaving anything on the table, I should say, due to someone's lack of or their beliefs. So definitely explore, 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 and connect with the right people.
Yeah, and we definitely recommend listening to Profit First, reading Profit First, and if it makes sense to you, because it's written by an entrepreneur to entrepreneurs. It's not an accounting book written for accountants. It's an entrepreneur telling you his painful lessons, the tuition he paid, the wins he had, a methodology that makes sense for everyday entrepreneurs. And there's some pieces of it that you can put into your business and implement right away. The multiple bank accounts, like I said, that just a savings account with profit and tax and a small percentage of your income going over there will be a game changer, because in 6 months, all of a sudden you have a couple $1,000s sitting over there and you're like, oh, I totally forgot. That's amazing.
Right. Right. It's definitely awesome. I mean, I love the system. I run it myself for me. So it's giving me clarity because before then I used to be that person like, oh, it's Friday. Like now I'm like, it's Friday. It's been a long week. I'm gonna go treat myself. And everything in the bank account is mine. And then when I sit down Monday, I'm like, oh, I had a little bit too much fun this weekend.
Too much treating myself, right? And now you have a profit account, so you know what your
Right.
spending budget is for that
Right.
splurge. And there's a lot more to Profit First, and we'll do other episodes on it. But this one is specifically on the tax account and why it's so beneficial. Because with that separate account, you have cash available to not, if you have a tax bill, to pay it and not be stressed. I remember when the first year I implemented Profit First, I did have a tax bill. And I remember I had $10,000 in my tax account and my tax bill was less than that. And it was such a relief to be able to write that check I went online and paid the thing and still have money left in that account. And it was just like, there was no stress at tax time. I knew I had it. My books were good. I knew I had money set aside. Tax bill came, paid the tax bill, still had money in the bank. I was winning. Life was amazing. Right. And now I have tax strategy. And so now I use that money the way that Alexis tells me to.
And you're winning still. How about that?
I am winning, and tax time is still not scary. All right. So some key takeaways here from my end is profit is a habit and not an afterthought. If you want to scale your business, if you want to get out of debt, if you want to exit your company, all of those things are driven by your profit, not by your sales. 95% of businesses sell for a multiple of EBITDA, which is a factor of your profit, not your sales. If someone comes in and asks to buy your company, if you do a $10 million a year, but you have no profit, you are worth nothing. I did a valuation for a client this week. It was not a pretty number because she had no profit. So make sure that you make profit a priority and you take your sales less profit equal expenses and run your business. Go ahead today, tomorrow, next week, open that second checking or savings account, title it profit and tax, and just start putting a little bit of money over there. And when you start seeing that to grow, read the book, implement the system. If you want help, we are 100% here, but it's these small steps, these small behavioral changes that will make a world of difference, because now we have clients that have 6 figures in tax accounts that have conversations with Alexis and her team, need a fraction of that for their tax bill, and the rest of it goes to either in their pocket or for wealth building purposes. It is an amazing feeling to be able to give yourself a huge dividend at the end of the year, tax-free.
Right. It's beautiful. It's beautiful. And I love those success stories. They make me happy.
Yes, yes, yes. One client we had, I'll not be too detailed because I do listen to the show, but they had a 20% increase in income over 12 months and a 300% profit increase. So they had a small increase in sales, but a 300% increase in net income year over year. And they had 6 figures in their tax account. And then they had the conversation with Alexis and their team. I think they needed $7,000 for taxes, and the rest of it they were able to use for other tax strategies, wealth building tools, and a distribution. And with a kid in college, that was a really nice bump for them. The owner's a female, and she was super happy about that, so she could make that tuition payment. So Look, this is a great strategy. Having that money, having a tax strategist, profit first is magical when it comes for taxes. Alexis, what else can you tell us to wrap up this topic?
Yeah, definitely. Like you said, it's a behavior. But for the tax side of it, just definitely, I know we're always like, well, I don't want to pay taxes. I don't want to do that. Yeah, that's fine. We don't. But just having the security of knowing like the money is there and it's just holding. Think of it as a savings account. Because we're going to find you some strategy so that way, you can get your savings out your account. But definitely, just get with professional, get with us, our team, where we can help you and definitely get some tax strategies for you so that way you can take advantage of not paying in taxes. So that's my key takeaway when it comes to the profit first. And then, like I said, depending on where your business is, we can definitely help with the percentage and figuring out what works for you, and just kind of go from there. So again, it's all customized. It's a customized approach, but definitely start somewhere, get something going, and form good behavioral habits. Because once you start getting in the rhythm, as they say, of good habits, things will be good for you in life and definitely in your business and definitely with your tax situation. No surprises.
Yes, we do not want surprise tax bill. And profit first is a great way to avoid those, to have money set aside if you have a surprise tax bill because you have a tax professional. But if you don't want surprise tax bill, find a tax strategist, implement profit first. It is a game changer for your business. And like Alexis says, you can do this at home. My husband and I do this at home as well with multiple bank accounts. It is a great way to get out of debt, and be able to have cash available for investment as well. All right. So, Alexis, thank you so much for sharing about Profit First. I know you love it. I love it. It's an amazing book, y'all. Please read it, listen to it, open that extra bank account, savings account, and get started. Anything else, Alexis?
Yeah, just also just putting it out there as well, with Profit First. Profit First, the book is just really general. It goes to a general level, a broad overview. But they do have books that kind of go with different industries. So if you're in a different industry, real estate or a gym or hair salons, whatever, they do have different niches of the book on just different key things on how you can operate for that particular business. But generally, you can get the general book and go from there. But if you're like, hey, I'm really liking this and I want to know if there's anything specific to my line of business or what I do for a living, find and see if they have one for your niche. Like I said, they have several out there, and you can just see if there are any industry things that you can kind of key into and deep dive as you go into the profit first space.
I love it. I love it. And if you want help with Profit First tax strategy, just go to pamjordan.com, hit that schedule a call button. You'll get on with a call with a member of Alexis and our team. We can hook you up with one of Alexis' strategists. We can hook you up with one of my CFOs. We can take care of your books, get you rocking and rolling. Make sure that you are subscribed to Apple Podcasts, Spotify, YouTube, or wherever you listen. This has been an amazing episode of Pivot to Profit. And remember, it's not what you make that matters. It's what you keep. We will see you next time.